Hi, Luke Lango here, America's #1 stock picker. And this is InvestorPlace Quick Picks, where we communicate to you some of the market's best investment ideas in just 10 minutes.
America's #1 stock picker, Luke Lango's InvestorPlace Quick Picks.
Today, we're going to talk about one of my favorite small cap growth stocks to buy and hold for the next 10 years. The name, Sprout Social, ticker SPT. Now, half a year ago, Sprout Social was a relatively small and unknown social media management software company that wasn't on any investors' radars. But Sprout Social stock has since been one of the market's biggest winners, rising as much as 160% over the past 6 months, thanks to soaring demand for the company's social media brand management tools in today's increasingly social media dominated world. But, and this is a huge but, this is still just a $3 billion company, disrupting an enormous multi-$100 billion brand marketing industry with a best-in-breed solution, huge competitive advantages, and a hyper-scalable business model that will produce enormous profits at scale. Basically, the big rally in Sprout Social stock is far from over. This one still has more than 100% upside left. Here's why. Now, the core of the bull thesis on Sprout Social stock boils down to one very simple observation. We used to discover products and experiences through television, newspapers, or magazines. Now, we discover that stuff on social media. Everyone is on social media these days. About 3.8 billion people specifically. More than that, those 3.8 billion people spend a whopping 2.5 hours every day on social media apps. In other words, the world is addicted to social media. It should be no surprise then that social media is becoming much more than just chatting to friends and sharing photos. It's a place where we debate political ideas, where we make video content, where we, more recently, rally the troops to pump up GameStop stock. And relevant to Sprout Social, it's a product discovery channel now too. A recent Square survey found that 75% of US consumers use Facebook to discover new products, services, and brands. That's big, that's huge. So basically, social media has become an integral part of the customer experience. And as an integral part of the customer experience, social media management is turning into a mission-critical component for businesses of all shapes and sizes. In short, if a business wants to succeed today, it needs to be good at social media. Now, the big problem here is that businesses broadly aren't good at social media, and why should they be? After all, businesses weren't good at selling things through newspapers or TV traditionally. Most usually, businesses made products and services and then tapped professional marketing firms and agencies to sell those products and services through the appropriate channels. They outsourced marketing. Or perhaps more specifically, they got help in marketing their products and services. But in the social media world, everyone's trying to do it yourself. They're just going at it alone. There are 90 million businesses that are active on social media today. Only 5% have adopted software to control and optimize their social media presence. That's a tiny fraction. Importantly, the ones that are getting help on social media are winning. Their revenues are growing faster, and they are beating out their competitors. And so begins the competitive flywheel. If brand A is using professional tools to sell on social media and winning, then all of brand A's competitors will eventually adopt similar professional tools to sell on social media too. No one wants to get left behind. We're all running the same race. It's a growth flywheel. And this growth flywheel means that over time, that 5% number of companies that are using social media or using professional tools to manage their spend on social media, that 5% number is gonna rise to 10%, 20%, 30%, and even higher over time. Of course, this reality implies a huge growth runway ahead for Sprout Social. Now, in the booming social media management space, Sprout Social reigns supreme as the best-in-breed provider of the market's only end-to-end social media management solution, which helps businesses control everything on social, from choosing what to post to deciding when to post to tracking how a post did based on engagement metrics and everything else in between. It's a powerful, fully integrated platform that helps brands facilitate social communication with customers. The platform leverages mountains of social data across its entire ecosystem to provide real-time insights and improve multiple business functions, everything from marketing to sales to support to success to product to strategy. It's an all-in-one enterprise platform for all things social media. Now, Sprout Social is the biggest provider of these tools. They aren't the only one though. But size is a huge advantage here, since size means more data and partnerships, which means more valuable insights and more seamless integrations, and ultimately a better platform for businesses. Thus, Sprout Social is in a position of strength today to continue to lead the booming social media management software space into a bright future. Fortunately for investors, Sprout Social's hyper growth potential is not priced into Sprout Social stock yet, implying huge upside potential for shares over the next decade. See, Sprout Social has just 25,556 customers today. That's up an impressive 11% year over year, but it's still just a fraction of the 90 million businesses on social media today. Even if just a third of those businesses end up deploying social media management software by the end of the decade, then Sprout Social today is tapping into less than 0.1% of its addressable market. The runway is enormous. And given the huge opportunity here, my long-term model on Sprout Social makes some pretty optimistic assumptions about the company's long-term growth trajectory. Pretty much, I basically think that this company can sustain double-digit customer growth over the next 10 years, getting to about 100,000 customers by 2030. I also see revenues growing by 20% plus over the next 10 years as that 10% plus customer growth combines with probably 10% plus average spend per customer growth. That gets you to about revenues of $1 billion by 2030. I also think gross margins will trend towards 80%, which is within management's range for long-term gross margins, their long-term targets. Operating margin should probably, tap out around 30%, because positive operating leverage will be driven by increasing revenue per customer and powerful scalability from Sprout's software subscription business model. So basically, there's a lot of growth here, right? You have the customer growth, you have the average spend growth, you have the margin growth. All of that means enormous profit growth. And as go profits, so go stocks. My numbers say that Sprout's probably gonna do about $4.50 in earnings per share by 2030. Throw a 35x multiple on that, which is average for application software stocks like this. And you're looking at a 2029 price target for Sprout Social of over 150. We're down at 60 today, so that implies more than 150% upside over the next several years. Well, that's all we have for this edition of InvestorPlace Quick Picks. I hope you like what you saw. If you did, please subscribe, hit that notification bell, smash the like button, maybe follow me on Twitter, or if you like to read, come over and visit us at InvestorPlace.com, where we have some of the market's best analysis. Until next time, cheers, happy investing to all.